market strategist with ATFX. Let's take a look at the markets. The euro's down quite a bit this morning and it looks to be triggered on German data. I just looked at that report. It doesn't look that bad, so I'm not really sure exactly if that was the reason for people selling, but the timing fits perfectly at 8:30. The actual figures, so the actual euro dollar dropped, and at that time we had German PMI figures. German PMI manufacturing was slightly lower than expected. That's pretty much it. Let me show you the economic calendar. So today at 8:30, let's see if I can actually find it here. Today, let me see here. There we go. Here we go. So you can see here how the German manufacturing PMI printed 44.5, which is slightly higher than the previous number in March, but slightly lower than the 45. So obviously what it does highlight is that the German manufacturing sector is suffering. And then you have German services PMI, which was actually slightly higher. So on an aggregate basis, on the composite, the numbers was slightly better than expected. But obviously for Germany, which is a country that has a very strong manufacturing sector, it's important to that the manufacturing index is actually higher. Like if you look at the UK, they don't have a big manufacturing sector. They have a big services sector, so there's the other way around. So these figures, the fact that we're under that 50 level does suggest that the German economy right now is probably not doing too well. It's gonna probably be the third quarter. Obviously we're now in the second quarter, but these figures, the way they look like, they do suggest that maybe, we had a very weak first quarter, or relatively weak first quarter, and now heading into the first quarter as well, second quarter, it's not looking that good either. So that explains why I guess the euro is lower. Now technically here, we talked yesterday about buying here. The market did slip into that buy area, but as you can see now, it triggered below that level. Now, is it time to sell a lot of euros? I don't really think so. We can definitely say that short-term uptrend that scalpers were using, that little short-term uptrend is over. But for someone like myself that likes to hold positions for a few days and weeks, then there's nothing changed really here. We are just going a little bit lower, and this is not really the pair to be trading the euro. I think there's probably some other pairs around that makes more sense, because for now, especially if you look at it from a daily time frame, there's nothing really that has happened here. The market is just very bearish here today, but from a big picture perspective, we're still within that range. Can't expect the market to go much higher or lower. Now, let's see what happens over the next few days. I don't want to have a strong view here just before the holidays. Again, and it's not just about the holidays. The fact is that it is a big sideways market, and we had a little bit of things were going well here on the move to the upside. We did that well, but now it ended that. And again, short here right now, stop on the other side. We'll say we're short on a bounce. Okay, if we retest the lows, we make 89 pip, but we'll have a 52 pip stop loss. But there's no way to know that 52 or that this high here at 130.13.27 is going to be relevant, because the only relevant levels for the market is this zone here, and then you have this little zone here. These are the only two levels right now that this market cares about. Anything in the middle here, it doesn't care about. And that's why, for example, when I trade, let's try to use just the big levels. To give you a good idea, I am short gold. So here in gold, we talked about this and we had that decline. So as you can see here, you got a big head and shoulders, left, right shoulder and head. And then this was an important low because it was the March low and the April low. So when we traded below this level, I knew it was going to affect a lot of people. And for now, the trend remains bearish here. The market may easily, go up, test my entry level, which is pretty much around the March low, but I have my stop loss on the other side here. If this works out, and we go all the way down to target, I'll be making 7 times my risk. So if I pull 1% risk on here, I will be making 7%, which is not that bad. So these are the sort of trade ideas I want to take them on the big picture, like and big levels that really matter for hedge funds and central banks and so on and so on. So as we're talking about gold, again, we had a bit of a test yesterday. We may easily test that high again. But again, as long as you trade below the 1288 level, which is just above the April 16 high, this will be a bearish market. Might go up, and then probably I think we're going to go lower. And when it clearly looks like we are moving away from this little area here around yesterday's high, that trend funding level is going to be move down here. And in my case, I'll be more or less at break even. As for GBP versus the USD, here as well, it's just the big levels that matter for the market right now. The trend is bullish about 129.50, and I'll continue to be bullish. We were bullish here, that worked out fine. Bullish here as well, we moved upwards. Yeah, so I think we could easily go up here. But not easily, but the trend is bullish, so I want to continue to be bullish. So yeah. I'll spot the dollar yen. The dollar yen is moving a little bit lower today. Not a lot. Usually, there's a saying, what can't go upwards will usually go lower. In this case, the dollar yen was not able to trade much higher. So we're having that little bit of a pullback. If we go down to 111.45, I think traders will try to buy that and then try to lift the price higher. We're still dealing with the head and shoulders. There are people that are long here. Their stop loss orders are probably down here. And then there are people that want to go long here, and they probably have their stop loss orders here. And then you have people, of course, that want to fight against the head and shoulders. Maybe they're gonna be right, but I personally think they're gonna be wrong. And then the right and wrong thing as well when it comes down to trading doesn't really matter too much. If they're right, maybe they'll get 71 pip profit. Well, if they're wrong, they technically have 212 pip potential loss if they would keep it all the way up to the target here. So it's always that risk reward ratio we need to balance, and then the percentage gain of say, so the success rate, if it's around 50 or 60, which is the norm around forex traders, as long as you have the risk reward ratio in place, it doesn't matter. In fact, if you have the risk reward ratio in place, you can be wrong, I think, up to 38% of the time and still be profitable. The problem, of course, if you're not profitable, if you lose like 80 out of 100 trades, is that it's mentally very difficult to stick with that system, because it's mentally tiring to be wrong 80 times just to have those 20 winning trades. As well, if you try to push the risk reward ratio concept too much, so you're looking to get 5 times your profit or 7 or 8, it's like very big and it doesn't make too much sense from the technicals, then there's a high risk that it's not going to work out. And the reason for that many times is that people look, if they want to have a 5 or 6, 7 time risk reward ratio, is what they have done is that they keep the profit target where it should be, but they have pushed the take profit too tight, and that's so what happens if the top loss is too tight. It's more likely your stop loss is going to be hit before you ever reach that target. So there has to be a bit of a balance. As for gold, which we just talked about, that risk reward ratio is good. It's a solid 7, but I also have my stop loss at an important level, such as a daily high. And when I refer to that we push the risk reward ratio concept to extreme, is people that would, for example, they would sell here and they put a stop loss just above yesterday's high. If they sell, for example, today, put a stop loss just above yesterday's high, they will get a 13 times risk reward ratio on that. But the problem here is that the market could easily just test that and then go lower. And that's why I'm saying, okay, in my case, like, okay, let's have a smaller risk reward ratio, but let's make sure we put the stop loss at a level where it doesn't get touched. Let's move along here. So this is crude oil prices. They're down a tiny bit today, 27 basis points, and there's not much happening here. The market has like a double top, triple top. Just a minute. And it has that double, triple top sort of formation. If we take out the high, I think people will be quite encouraged to try to lift this. I'm, however, just waiting for that pullback. I have no issues, and I think no traders should have no issues of not trading in market for quite some time. As you know, we had some solid setups here and here. We reached the profit targets on all those, and since pretty much, well, yeah, believe it or not, April 3rd. So that's been, yeah, it's almost, yeah, 2 weeks and 1 day. We haven't had a proper entry here according to what I'm looking for. And that's how trading should be. I watch about 120 markets. I'm just looking for the best setups in these markets. Sometimes it's not even a good setup in any market for a week or 2 or 3. Okay, this is the S&P. And, if you really wanted to buy, well, this is the time to get going. We pulled back quite a bit. And, if you're looking to sell, it's time to start to get ready potentially. Why? Because the market had a significant rally, right? Went all the way up. And yes, we're so close to the 2018 high. And what I'm looking at here and I'm thinking is that if we reverse here, then that could be maybe something like beginning like this. And eventually, I guess we need to have some sort of a correction. I mean, we can easily go down to 27.90, maybe even 27 or so. Technically, actually 26.22 without having sort of breaking the overall bullish trend. Take fib from the low to the high, and these are all your 3 fibs. So 50% correction is nothing really. It wouldn't necessarily threaten the integrity of the whole bull market. So that's something we need to be careful about. So there is a level down here which is definitely important, which is the 27.85 level, and then you have this level here. Now what I do is that when the market goes up like this, I push my stop loss so that trend defining level closer and closer to price. And when the market starts to trade sideways here, the stop loss eventually goes really, really tight. Which happens is that we get stopped out here, and then usually I take a bit of a break, try to figure out what the market really wants to do, and then if it goes down and up and then go down, I turn really aggressively bearish. To give you an idea, I was bullish on the way up here, and then here I think last stop out was somewhere here around 2,900, and then following that the market declined. We did never ever say here on the webinars that you should look to buy. In fact, when we traded below here, we said look to sell, and then we'll look into sell here again, but then that never materialized. So yeah, this is, at least in the short term, a correction. The trend is for now bullish, about 28.72, and as long as trade above this level, we should be okay. But trade below this, we'll probably trade a bit lower, and it could be the beginning of a formation of a high, and we could potentially have that pullback if we have more negative data. German DAX is down a tiny bit, but you can hardly see it. It's down with 24.5 points. It's looking relatively good. You see, this market is moving upwards because it thinks that economic data from Germany is going to be good in 2-3 months from now. Otherwise, it wouldn't be up here. If the market was generally concerned about the German data, this market would have been much lower, I think. For now, the trend remains bullish above this level, and we're not that far away from that profit target. Markets, as you know, they're not trending as they used to, unfortunately. So it might be interesting maybe to book some profits, like chip off a quarter or 0.5% or half or 50%. Leave that up to you. But the ultimate goal here is for the market to go upwards. Trend defining level is the same as down here. Don't want to move that upwards because you have some small tiny lows here, but they're not really relevant for anyone except the scalpers, and that's it really. For the big picture, as long as straight above this level, the trend will remain bullish. As well, if you are trading the German DAX, they have a lot of bank holidays in Germany, so you need to bear in mind. I mean, just in the UK, the markets are closed tomorrow and on Monday, so I'm not sure exactly how it is with the German DAX, but they might have another day of being closed. So that's something you need to bear in mind as well. Not that I personally suspect anything big happen over this weekend, but you never know. Some news may happen that could shake up the markets, and then we could be much higher or much lower. Okay, as you know, I can't actually see the chat box in this for some reason. I think the internet I'm using here is actually being restricted. So what I'm gonna do now is that I'm going to check on YouTube on my mobile and see if I can see that chat. And if there's not, as you know, guys, you're most welcome to just ping me via Twitter at AlexFX00. Yeah, so for some reason that chat box, it's not even visible on mobile. I'm not sure if it's the settings are wrong or something like that. Okay, I think we're gonna wrap things up, guys. And I wanna, okay, let me see here. Actually, now we can see. Yes, so there is a chat. Yeah, so we don't have any questions here. If you do have any questions, you're almost welcome to put them in the chat box. What we'll do now, actually, if you do have questions, then do let me know. Okay, no questions. So guys, we're gonna wrap things up. I hope you have a good time off for a holiday if you're taking some, just relaxing. And I'll see you guys on, not on Tuesday, or not on Monday. Tuesday would have been the day, right? But I'm back on the 23rd. That's when we're gonna have the next morning webinar here at ATFX. If you have any questions, let me know. And you're most welcome to chat to me via Twitter at AlexFX00. You're also welcome to send emails on alejandro.zambrano@atfx.com. Don't forget to subscribe and like the video. Thank you, and bye-bye.